The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. Neil Green again with you on this weekly webinar at iTrader.com. Hope everybody's doing well. We're going to start in about a minute. Just want to wait for all the traders that registered to attend, and we will begin. So just a second. Okay, guys. Hopefully you can all hear me. We're doing good. All right, so welcome to this weekly webinar brought to you by iTrader.com. This is Neil Green again with you on this weekly webinar, talking about the topics of this week and how to trade them and take a look at the market and so on, as we do every week at the same hour. Let me remind you or tell you, if you're new here, you have a chat window. So if you have any questions during the webinar, I'm doing my best in order to answer all your questions. So you have a chat window. Just write me down if you have any questions, anything you would like me to clarify, and I'll do my best during the webinar to answer all your questions and give you all the necessary information. The earnings season. You ready to talk about earnings season? Okay, this is part 2. Last week we had earnings season part 1. We talked about the earnings season, which takes place, we said, 4 times a year in the United States. All right. So basically what we trade on during the earnings season is US stocks. Okay, just to remind you, the US market, your stock market is open from 1:30 GMT, which is 2:30 London time, all the way to 9 p.m. London time. We're talking about 9:30 a.m. New York time to 4 p.m. New York time. This is the only time when we as traders can trade. Okay, of course, the stock market, we can open and close positions only when the stock market is open. Most of the movements, by the way, with the stock prices are when the stock market is closed. We talked about it in past webinar. Let me just explain why. Okay, the biggest movements, the biggest money that is trading on stocks is when the stock market is closed, between institutions like banks, investing houses. Okay, we're talking about billions of dollars here that these people or these bodies are trading between them. And during the earnings season, okay, the earnings season takes place 4 times a year, as we said, every 3 months in the United States. It's the earning report, which means that all the companies have to hand out the reports and gives us information about actually what's going on in the biggest companies or all companies in the United States. Since they have shares, okay, we as public, we have ownership or partnership in these companies. If we own stocks, own shares, we must know what's going on in these companies in order to know do we like to hold on to these shares, what is our, if there's any dividend, what is the EPS, the earnings per share, how much money we get for that, and so on. You guys are trading CFD, so you're trading only on the price of the stock. Okay, you're buying a contract for difference. We're not really owning the stock, we just trade on the differences in the price of these stocks. And all we need to know is to identify, okay, by looking at these reports, whether the price of the stock is going to go up or down. Of course, we have two options, as you remember, okay, buy or sell options. We can take a long position or a short position, so we can trade both ways. So for us, it doesn't matter if the price of the stock is going to go up or down. The only thing that we need to know as traders is how to identify whether the price is going to go up or down according to these reports. And the special thing on this, on the report season, the earnings season that takes place for a month and a half, is that you guys can trade, of course, when the market is open after the report, and take advantage of the knowledge that I'm giving you in these webinars in order to take some good positions. All right, so Earnings season is almost halfway through. Okay, started about 2 weeks ago. So far, companies' results are extremely strong. Okay, the U.S. market looks fantastic. Okay, looking at the results of this earnings season, we see some great results, and the stock are reacting to these results. The stock market, the U.S. stock market, is flying up right now. Better labor conditions. Okay, good NFPs supporting profits. Just to explain, if you were here ever, or if you ever traded an NFP, or on a webinar here, if you ever listened to it, every first Friday of the month we have the NFP, which is the non-farm payroll report. It's a governmental report by the U.S. government, and we get all the reports about the NFP, about the unemployment rate, about wage, right, average hourly earnings, and so on. So we get reports about the quantity and the quality of the U.S. jobs. Right now, it looks great since Trump was elected. If you look at the U.S. market, we have more, like 3 point something million new jobs since he was elected in the U.S. Unemployment, the lowest rate ever. Last NFE was 3.8. Right now, we went up to 4%, but still very low. Okay, we're talking about 96% out of the Americans that can work are working. NFPs, we have more people hired than fired, which is great. And the most important thing, not only the quantity, if you look at the quality of the jobs, okay, salaries, wages are going up. The Americans are making more money. And if you look at the US indices, you can see that they're going up. So it's supporting profits. Of course, more people are working, salaries are higher. The Americans are making money. These companies are making more money. And the second reason for that is Donald Trump's tax cuts from 35%. We're talking about taxes for companies, all right, 35% down to 21%. Also support earnings. Think about it, that this huge corporation that you can trade on here, okay, used to pay 35% taxes. And after this tax reform that went through Congress in the United States, they pay only 21%. So they have much more money that stays with the company, that is not going to the government. Okay, less taxes, which means these corporations have much more money. They can hire more employees. They can pay higher salaries. They can put money into research and so on, which means they're getting bigger. They make more money. And the U.S. market reacts accordingly. So it looks pretty good right now. Okay, the earnings season. Every earnings season starts with the financial system. It starts with the banks, and then go on to technology stocks, technology companies, and then the rest. Okay, for about a month and a half. Bank trade package, very popular among traders and investors. You have to understand, I'm working with traders for many years. And these guys, every time, I see a lot of traders that are doing the smart thing. They understand that all the banks, we talked about it on past webinars. I'm just going to repeat for the people that were not here. Okay, all these banks, all the US banks are highly correlated, because the same regulations and the same thing affect these banks. Okay, interest rate in the United States right now is pretty high compared to what it was, I don't know, 3 years ago. Okay, since the crisis of 2008, we talked about it. Interest rate went down all the way to 0.25% and stayed the same way until December of 2015, when we saw the first hike to 0.5%, and then it went up 0.75, 1%, and so on. Right now, interest rate in the United States is 2.25%, and we expect another hike by the end of the year, and more hikes. Interest rate, it's very interesting, because interest rate, because the United States has, we're talking about the central bank, the Federal Reserve, which the head is Jerome Powell, 16 members of the Fed. They have right now all the reasons to raise interest rate, because the US stock market looks very strong. Okay, usually if the economy is not that strong, okay, higher interest rate, what they cause is the stock market to go down. Okay, think about it. Interest rate goes up, money goes to the banks, right? If I can put my money in a saving account and get higher percentage, all right, I would like to do that, right? I would like, if I get higher interest rate in the banks, non-risk. I'm talking about American banks, all right, not banks in countries that are going bankrupt, and this is why interest rate is so high. You have to understand that high interest rate with stock market that is not looking good is very risky. But we're talking about the biggest economy in the world. We're talking about the United States of America. If you put your money in one of the banks, JP Morgan, Bank of America, Goldman Sachs, Citigroup, and so on, talking about the biggest American banks, interest rate is higher, which means you just close a saving account and then you're going to get higher interest rate for your money. It's not the same potential of the stock market, but think about it. Higher interest rate money goes off the stock market, okay? If I have, I don't know, $500,000, $1 million, or $2 million, or whatever, invested in stocks and interest rates are going up, okay, 3 hikes a year from 1% to 2% to 3%, I would prefer to sell my stocks and put my money in the bank in a saving account because I'm going to get higher percentage, right? So this is why usually the US stock market is getting weaker on higher rates. Right now, it's not getting weaker because of the low taxes. We talked about it, went down from 35% to 21%. So these companies are making a huge incomes, more payrolls, wages are going up. We talked about it on the NFP reports. So it looks pretty good. Actually, it looks excellent, not only pretty good. And so higher interest rate, which means the banks are making more money, right? Interest rate is the price of money. If I'm selling the bank money, which means I'm opening a saving account, I'm going to get more money for my money, more interest, right? If the banks are giving out loans and mortgages, okay, people are buying houses, they're taking mortgage usually. Usually we put it down payment if you ever bought a house, then you took a mortgage from the bank. Higher interest rate means that the banking system are making more profit. So think about it. Taxes are down for everyone, banks as well, from 35% to 21%. They pay less taxes. Higher interest rate, which means they make more money out of loans and out of mortgages. They take this money, maybe they invest it in the stock market. The stock market is flying up because of the good NFP, so they make money from everywhere. Okay, bank trade package, very popular. We said bank stocks continued yesterday. Their uptrend from July 13th when it started. Okay, bank after bank are reporting in this earnings season. We have some great reports. Traders use the bank trade to diversify the trading through all major stocks. Let me just explain. Because these banks, right, these bank stocks are working with high, I would say, the correlation is very identical. Okay, if you look at let me just show you. Okay, we're talking about JP Morgan, Bank of America, Citi, and so on. Take a look at this bank. So I'm opening the MetaTrader right now. Okay, going what you see here in green under the currencies, these are the US stock market, and the US market is open right now as we speak, so I can show you. Okay, BOA, for example, Bank of America, on a daily chart, this is a daily chart, each candle is 1 day, you see from the report is flying up, right? A good report, interest rates are higher, low taxes, banks are making money, the reports looks good, people are buying Bank of America, more demand for Bank of America stocks, and the price of the stock is going up. Okay, let's talk numbers. Okay, it went up in a few days from around $28 per share to almost 31. Okay, in percentages, like it's a lot. We're talking about like 10%. Citigroup. Now, isn't it look almost the same? Look at this: Bank of America, Citigroup. Let's choose JP Morgan, JPM. See, it looks the same on the daily chart, right? Very highly correlated. Okay, we said the same things affect all the major US banks. Why is it good? Because if I'm trading on the bank package, okay, it depends if I want to try to split it to two. I can try to trade it on the short, or I would say medium term, or the long term. Okay? It depends on you. Some of you are daily traders, some of you are more like investors. Yeah, it depends for how long you want to take your positions. Okay, of course, for the long term, there's nothing to say. Take a look at JP Morgan on a monthly chart. It's going up this month, especially because of the earning report. But on a daily chart, let me zoom out a little bit. Since the report, okay, it's flying up, and it looks great. All right. So for the shorter term, okay, good reports. And why is it good? Because if I'm trading the earnings season, and I have one good, I want to trade the bank package, for example, right? The bank package gives me the opportunity, because we have a few banks that we can trade on, to diversify my portfolio. Okay, smart trader. I'm saying it every webinar. I'll repeat it again. The smart trader is one that works with a big portfolio and diversify his portfolio. Guys, don't put all the eggs in one basket. If I want to trade banks, okay, they're very highly correlated. So if JP Morgan, for example, reported today and Goldman Sachs will report tomorrow, just for an example, right? We had a report already. I'm talking about the past right now. But so JP Morgan, and then I have Bank of America day after day. If I had one good report on one bank, usually the other banks are going to have good reports as well, because the same things, as we said, are affecting all the banks. So I could know what might happen tomorrow. All right. So if I'm taking a long position, for example, on the other on one bank, after one bank showed me great report, okay, that might be a good diversification of my portfolio. Got it? All right, we're doing good. Okay, let's go on. So we talked about banks, okay? The financial system, they're the first one to report. They reported already, but you can remember what I'm saying here and write it down for every earning season. Every 3 months, it works exactly the same way 4 times a year. So the cloud storage, okay? Cloud storage, let's go to the cloud companies. Cloud, everybody knows that everything is on cloud right now, right? If you have a smartphone, if you save something, it's in the cloud. Cloud storage earnings are very strong, just like the banks. Your stock market totally looks great. Both IBM and Microsoft are huge cloud storage companies, very correlated as well. Okay, I'm just showing you every page here. I'm showing you a few stocks, a few companies that are very correlated, going the same way. Cloud earnings growth created a big boost for their profile line. Microsoft trading on a new record high following the report of last week. Okay, going to the MetaTrader just to show you the report we talked about. I think last webinar we talked about, it was before the report of IBM. We talked about the importance of this cloud. They had a good report, and look what happened. All right, we had a good report by IBM, gap up. Okay, the day before the report, the closing price was 144, almost $145 per share. It opened on 147, went up all the way to 150. And then the price was very, very high. And what usually happens is all the people that were holding, look at what happened. This is very interesting. Now, try to think about the psychology of the traders. Let me show you this example on IBM. We have a week or 2 weeks before the report. Okay, a lot of traders are buying IBM because they believe that, I don't know, the cloud storage and so on, they believed in a good report. So they decided to buy the stock, and then the price of the stock is going up. Went up all the way to this resistance line, you see here, where it stopped 1, 2 times and so on, stopped here, and then they've decided to sell, right? On the technical level, we have support and resistance. This is a key level. On 146, almost 147, it was the highest price that from April, and then again on June for 1, 2, 3, 4 days didn't manage to cross this line. And then we had 2 days on July 12, July 13, that the price have reached 147, almost 147, before the earning report, a few days before. So a lot of people that bought here, a lot of money have decided to sell it in 3 days. And then you see the day before the report. Look at what happened here. From 143 to 144, $1. Okay, the price went $1 because a lot of buyers went in a day before the report. And then the market was closed, right? The reports are published either before the US market is open or after it's closed. So they bought stocks before the market closed, and then they made a lot of money on the opening. Okay, it was a good report. Price went up and then went down because the price was over the limit. Okay, and all the people that bought this stock have decided to cash out, right? We bought a stock, we took a long position, we made a lot of money here, we made a lot of money the day after, and then it's a good time you have to know when to exit the trade, okay? To take the money to your balance, finish the trade, take money, you're out. And then the stock went down a little bit. Show you the same thing happened with Microsoft. Not that it went down, but we had a good report by Microsoft. Went down today a little bit. Okay, Microsoft right now is traded at the highest point ever. So we have a new record for Microsoft. Okay, and look what happened. We had a good report, highest point, and right now the traders are struggling whether to buy or to get rid of the stocks that they bought a year ago, a month ago, a week ago, a day before the report on the highest price, right? Think about it just like in life. When you have a product that you want to buy or any service and it's very cheap, okay, you want to be on the buying side, right? If the product is very, very cheap, I would like to buy it, right? If the price is low. And then the price is very expensive. In this case, the most expensive ever. The price is getting to the highest point. Okay, me as trader, I don't know if I want to hold on to this stock, to this long position. I don't know if I want to, stay in the position, because this is a good time to get off the position and take money, take profit. All right, when you take any trade, guys, you have the possibility to use take profit. If I want to open here on Microsoft, you see stop loss and take profit. You can protect yourself. Stop loss, how much money I'm willing to risk. You put a price, and take profit is very important because we want to know at what point I would like to exit, to get off the trade, to cash out, to take money. I don't want to trade anymore. Microsoft, the highest point ever. I bought it a few days before. There was a good earning report. Okay, when it comes to the P&L, EPS, cloud storage, good information. Price of the stock went to the highest point ever. This is why you see some red candles. It's a great time to get rid of the stock and take cash. All right, let's go on. Okay. Cloud earning growth created a big boost. We said Microsoft trading on a new record high following the report last week. All right, we good? Any questions so far? All right, let's go on. If you have questions, I'm just reminding you, or anything you would like to add, I always like to learn. Write on the chat window and click on enter. Okay, FANG is back. Okay, this is the biggest thing in the market right now, and let's talk about it. Google reporting earning yesterday. Okay, everybody knows Google, right? FANG stands for Facebook, Amazon, Netflix, and Google. If you add Apple to this, some people do FAANG. If you add Apple, you're gonna get to over $3 trillion in market capitalization. All right, market cap over 3 trillion, which is like almost the economy of Germany, more than the economy of Italy. We're talking about the biggest company in the world. They have a lot of weight on the S&P, on Nasdaq, and so on. These are great, great companies. Every movement of them has a lot of weight on the index itself. So FANG is back right now. This is what's going on right now as we speak. Okay, the FANG are reporting. We had Netflix. We had a good. We had a report. Wasn't good, but let me explain what happened. We had one report of Netflix. Yesterday, Google have reported, and we still have ahead Facebook and Amazon and Apple as well. So Google reported earnings yesterday. Company beat expectation and is trading a new record high. Okay, if you look at the EPS, you're gonna see that it was 9 point something dollar per share EPS expected, and actually the result was 4 point something. But it's because of the fine that they received from the EU, if you remember. So the actual EPS was 11.75, if I'm not wrong, dollar per share, which is more than expected if you don't include the fine that they received from the EU, because it's a one-time fine. So when you look at earnings, you want to see what they've done without the fine. So Google looked great, a great report, just like the rest of the market. Now, guys, when we trade, last webinar I talked about it, and let me give you this technique again. I cannot trade when the market is closed. Okay, and we said that these reports are published either before the market is open or after it closed, which for us as traders is the same, because the reports are published when the market is closed. Right? The day after, what do? Okay, we have the day after, and we want to know how to trade this stock. So I gave you 3 things, and you can write it down. First of all, do a technical analysis of the stock that you would like to trade on. Choose the stocks that you would like to trade on during the earnings season, and put support and resistance levels to understand the highs and the lows. Second thing you would like to do is think what you have done, what you would do if you were holding this stock for a week, 2 weeks, 3 weeks, what you would do after the report. Okay, think about the human mind, because the whole capital market is based on expectations. Think about what you would do if you would have Google stocks before the report, and for example, there was a good report, and then you made a lot of money overnight. Would you wait? I don't know. The stock might go up, might go down. We're going to talk about it. And the third thing, you have the indices, the US indices that are open because we're trading on futures 24/5. So we can know if the overall mood of the stocks at the same day is going up or down. And let me show you. All right. Okay, so we had a good report of Google. Could be great news for FANG stocks like Facebook and Amazon that are ahead. And this is what I want to talk about generally today. Look at this. Let's take a look at Google. Okay, let's take a look at Google, and you know what? Let me tell you what happened. Let's do. Here I have Google here. This is beautiful. Look at what happened here. Okay, let's say I don't know what happened on the report itself, and the day before was July 23rd. Okay, this is a daily chart of Google. You see, Google is going up. Okay, just like the whole stock market, taxes are lower, same things that we said. Okay, huge company making a lot of money, everything is great. So people are buying Google's a few days before. Okay, now 1 day before the report, you can see that this is another thing. 1 day before the report, price of Google went up because a lot of traders have decided they were expecting, because of the US market, because of all the reports that we saw so far, they expected a good report by Google. So the day before the report, a lot of traders, big money, have decided to buy Google stock, and we saw a huge green candle. Okay, so this is one thing as a tip that I can give you. Think about the day before. Now, Google actually had a good report, and you see this gap up. The day before Google, the closing price was $1,204 per share, and then it opened on 1,261. Right, just for you to understand, if you would buy, let me just show you the potential. Let's say I'm taking an account of, I don't know, $10,000, a small account, all right? And a day before the report, I want to buy Google at the opening price at 1,180, right? So 10,000, you get leverage of 20 during the year and 10 during the earning season. So I can trade $10,000 10 times, which means you have $100,000 to buy Google stocks with our company, with iTrader.com. Okay. Now, the opening price, as we said here, was 1,180. So each stock is $1,180 per stock. So I could buy 84 stocks, okay, with the leverage. 84 stocks. The day after, okay, the US market is closed. I'm going to sleep, waking up, and then in the afternoon, morning in the United States, the day after, I see this opening price of 1,261. Okay, so 1,261 minus 1,180, which means I made $81 per stock. I had 84 stocks. We're talking about $6,800 profit overnight of just buying the stock before the report because of this good earning season. All right, and which is 60% out of my portfolio in 1 day. You put your money in the bank, you get 1% a year, 0.5% a year. I'm talking about 60% in 1 day using this leverage. Now I want you to tell me what would you do? What would you do if you would make 60%? You had an account of $10,000, more than 60, almost 70%. You would buy Google stock. It was a good report, and then the day after, the US market is open, and you see here in the MetaTrader that instead of 10,000, your equity is 16,800, and you have a P&L of a plus $6,800. What would you do? Would you hold on to the trade? Would you close it? Of course. All right. So the answer that I see here, close the trade, take the money, right? Because I don't know whether the price of the stock is going to go up or down. I don't want to guess, so I'm selling. This is what all the people done here. Look at this. This is the highest price ever of Google. You see? Never been so high. So even if I put a resistance level here of the highest prices, you went over it, right? So this is the highest price of Google ever. So this is one thing. Okay, when we talked about on the technical level. Psychologically, think about it. You just said it, guys. I would sell the stock. Highest price ever. Google is traded at NASDAQ. Okay, take a look at NASDAQ. Let's put NASDAQ here next to Google to show you. Okay, NASDAQ, if I look at the future index, which is somewhere around here, there you go. Taking a look at NASDAQ, today is red, open green, right now it's red, which means the total mood of stocks is going down. The reason for that is because of very, very good earning reports, and traders have decided to sell the stock in order to cash out. Okay, So this is what you see in Google right now. Two great opportunities. Okay, the first one was to buy it the day before the report, and the second is what you see, as you see right now, another trading opportunity the day after. Got it? All right. Okay, if you want to know, by the way, the dates, you go to itrader.com. Under news, you have the earnings season. You just click on that. Of course, you can sign in with your name, and you have all the dates here. So, who's ahead to publish? We have Google have reported, right? We had Netflix that I showed you last time. We have Facebook on the 25th, which is tomorrow, and Amazon in 2 days. So we have Facebook tomorrow, and Amazon are going to publish on Thursday, Wednesday and Thursday. Two of the major FANG stocks. Netflix had a bad report, but then the stock went up, okay, because generally Netflix is flying up. Google had a good report. Now we have Facebook and Amazon are ahead to trade. Remember, very strong correlation between the stocks, and I guess now you have the tools in order to know how to trade it. Good earnings from the technology sector is great for the Nasdaq index, since the Nasdaq index includes the 100 companies with the highest capitalization, capitalization in this market. They weight a lot in the index, which means that every movement of one of the FANG stocks, especially when they all go up, is pushing Nasdaq up. Nasdaq trading below its new record at high of 7,866 points. This is the last time that I saw it, but you can see it in your own eyes. Nasdaq 7,400. You see very, very high, highest ever daily chart of Nasdaq. Okay, take a look at the S&P, the leading 500 stocks in the US, and the Dow Jones, the 30 biggest corporation after the trade war with China, and right now it's going up. So give you overlook at the market. We have a Nasdaq trading below, almost below the new record. We have good earnings from banks, is great for the Dow Jones, and S&P, as I showed you, S&P 500 is 70 points away from a new record high, and the Dow Jones is 1,600 points away. All right, so it looks pretty good right now. After the trade war with China, indices went down a little bit, and right now, because of this earnings season, the indices, it looks like they're getting improved and they're going up. Okay, traders will continue to take advantage of earning reports. Two main trading packages, as we say, we have the bank trend and the FANG. Guys, I want you to remember, earnings will continue until mid-August, and I want you to remember that. Okay, if you are long-term investors, good reports are great for the long term until the next earning report for 3 months. All right, usually this is what happens. Okay, if you're more of a short term, take the things that I gave you. Okay, take a look, put some support and resistance if you work with a lot of leverage, and try to understand the psychology of the traders, what they would do, and take a look at the index of the same day, which means trade the day after. This is a daily trading. Trade the day after the report and then close the position at the same day. If you look for a long-term investment, okay, remember the packages, the high correlation between the US banks and the FANG companies, and of course, good luck. For more questions, contact your account managers. Okay, this is the time. Of course, you can email me during the week, and in order to register to the next webinar, you go to news, webinars, put in your first name, last name, and email address so we can contact you back. Of course, it's a free service for you guys. If you have any questions, this is the time. You can write me down in the chat window. Of course, contact your account managers. Okay, ask about the dates. You have it here because you asked me. Under news, earnings season, you have all the dates. Okay, you understand the correlations, so it should be pretty easy for you now, guys. And I guess that's it. All right. So I would like to thank you very much for participating. Wish you good luck. And remember, the earnings season is still, you know, we still have half of it ahead of us. So we just halfway through. Good luck with your trading. Trade smart. Thank you very much.